Good afternoon once again. Jeff Benson, Jacksonville, Florida, coming to you this afternoon. I really appreciate your time today, taking it. I know you're busy. We're going to take the next, let's say 20, 25 minutes and talk about builder's risk, and then we'll turn it over for questions. We've been getting a lot of questions lately, so I don't want to cut those short. So whatever questions they have, write them down, send them in, and we'll do our best to get to them. So this is the last webinar we're going to do in 2021. So what I was thinking is we've kind of dissected the coverage form, we've dissected the marketplace, we've talked about cat losses. So what we're going to do today is talk about our program. So this is a little more, I won't say it's marketing driven, but it kind of is, because we're very proud of the program that we've created. And so the way I approach this is that if I was an agent, what would I want to see in a builder's risk program? And so we've tried to address as much as possible. And if anything, if you guys have other ideas, we are very open to that, because we are flexible. One thing you'll say is we're very flexible. We are an aggressive market, and we want to write business. Simple as that. So what we're going to do today is take a very deep dive into our builder's risk program, and that is the Victor Builder's Risk Program. So the first place I start, and I have an underwriting background, is the coverage form. And we call that the base form. This is when you write a builder with us, builder's risk, these are the coverages you automatically get. These aren't things that you have to negotiate. They're included in the coverage form. And builder's risk is basically an uncontrolled inland marine line of business. So every carrier is different. The biggest mistake I see agents making is just assuming everybody's form is the same, and then they just go right to the rate and compare the rate. I can assure you, do not do that, because the forms are very different. So these things that are on this screen right here are all automatically included in the Victor Builder's Risk Coverage Form. Water intrusion, you hear a lot about that in the marketplace today. There's a lot of builder's risk claims countrywide. When I say we include it, it means we don't exclude it. So it's kind of funny in property underwriting, but what we do is it's included because it's not excluded. Sometimes people are actually looking for the coverage in the form, and it's not there, but it's there because it's not excluded. So keep that in mind. Sinkhole, automatically included. You do not have to ask for it. Wind coverage ceases. I'm not going to go through that. There's 7 or 8 different criteria, but we allow occupancy up to 90 days on commercial structures, commercial projects that are being leased or rented to others. We allow up to 75% occupancy automatically, so that's a little different than a lot of companies. Covered property, we have a lot of little nuances we do there. Landscaping is automatically included, as long as you include it when you write the policy. There's no sublimit for things like that, so we're very broad on the covered property. Covered cause of loss, I used to say all risk. I don't think we're supposed to say that anymore. We'll say a special risk, or but if it's not excluded, it's covered. And if you guys ever have a hypothetical and you want to talk about it, give me a call. I like those hypothetical situations. Interest of subcontractors, it's automatically included in our form. I've seen a lot of carriers that don't include that automatically. Coinsurance, we are a coinsurance form. If it's ground up new construction and you get a break on that, give me a call, we'll talk about it. But automatically in our form, up to $25,000 claim, we do not charge coinsurance. It's not involved. Existing structure, you have a endorsement that we add, and we can cover the existing structure on a renovation. We will do older structures. We'll take a look at it. We do want to make sure it's structurally sound, but we're very competitive on the existing structures. And the last piece is the reporting form. We do a lot of project one-shot policies, but we also are starting to write more and more reporting forms. You have a single-family builder building 10, 20, 50, 100 and more homes, and they want it on a reporting form. We're very flexible on the terms, and we'll work with you on that. That's definitely a class of business we want to write. Additional coverages, once again, these are automatically included in our policy. You don't have to talk to an underwriter. Once you sell our policy, these are the coverages you get. Soft costs at $100,000 is automatically included. If you want more, you just got to let us know. We can endorse the policy. There'll be a premium charge, but $100,000 is automatically included. That's very unusual in the marketplace. Ordinance and law, we include up to $1 million free, just automatically included in the policy. Property at temporary storage location. We include $500,000 automatically. We can go higher than that if necessary. Usually you don't have to, but you get $500,000 automatic. Property in transit, once again, $500,000 included automatically. When you add up these last two screens, all of this coverage that you're getting for our base coverage form, we like to think we've created, if not the best, surely one of the best policies in the marketplace today. Keep that in mind. The next thing when I look at a program, so our average policy premium is running about $2,500, and our minimum premium is $400. So we write a lot of small premium stuff, and we understand that if it's difficult for you, you're not going to do business with us. And if it's difficult for us on our end, we can't make a profit because we have to make this get these things flowing through our portal very quickly. So the first thing we did years ago is create a digital platform, an online portal, quote, bind, and issue. We had a CSR in Nashville, Tennessee that did a quote, bind, and issue in 1 minute and 37 seconds. That's what we're trying to get to. And we do want your feedback on this. We're always constantly with automation and the internet and the portals that we create, you got to keep adding features to stay ahead of the competition. We're very, very proud of our V-squared, and we like that. I'm not going to touch on the pass-through risk right now. Just keep that thought in mind. That's the risk that we really want to write. That's so easy. You don't have to talk to anybody. Enter the basic data, hit a button, get a quote, hit a button, get a policy. The other thing, though, is when you create a template-driven program, if you're not careful, you become very rigid. So we didn't want to be rigid. So we do, if you enter the data in the portal and it generates an underwriting hold, we want to be very quick to release that hold. So we want to be very flexible. And I'll show you once again when we get into the terms how flexible we can be. So just pick up the phone and call us. That 800 number is critically 944-7472. People ask me all the time, what should I do if I have a rush? Builders risk a lot of times. Builders said, the closing's tomorrow. I forgot to get the policy. I need it right now. If you enter the data in the portal, which should just take you a few minutes, if it's a pass-through, you'll get a policy immediately. If not, generates a hold, enter it in the portal, and then call that 800 number, and we'll get right on it. That's the best way to do a rush. And we understand this line of business. It's kind of the way we have to operate. Other lines got 60, 90 days to prepare a renewal. Builders risk is all new business, and it's always the last minute. I've seen it happen so many times. We get a situation where the owner thought the builder had the coverage, the builder thought the owner had the coverage. They started the project, nobody had the coverage. So they know there's exposure there, and they call all up in arms. We want to be there to help you. Underwriting team experience, I won't tell you how many years I've been in the business. Let's just say experienced. I like the word experienced. We have seen a lot of different things. I always think about that. I have a lot of different stories I could tell you about this, that, and the other that have happened. I love that an agent says, oh, that's never going to happen. I said, no, it does happen. We had a builder in Tennessee years ago that had the lawn stolen 3 times. They kept stealing his sod. I said, we had to get control of that. I don't know what he was doing with it, but anyway, that's just an example of some of the more unusual things that we see. Potential premium, let's talk about that. I had a funny story. Years ago, I worked for a company and they came out with a program for masonry non-combustible donut shops. And I'm not kidding you. That's what they wanted to write. I had a nice brochure. So I went to visit an agent in a rural area of the United States. It's actually in Texas. I had my brochure with me and I gave it to him and said, this is what we want to write. And he goes, Jeff, let's look out the front door. We walked outside of his office. It was in a small town. And he goes, look north, look south. How many of these things do you see? I go, none. He goes, you got a nice brochure, sounds good, but I don't really need it. So I learned that you create a program, and if the template and the underwriting criteria is too tight, it doesn't mean a lot to the agents. You can't write much business. So program eligibility, we can write up to 5 million frame. We can write up to 10 million masonry non-combustible fire resistant. That represents over 90% of all construction projects in the United States. As you drive around your hometown, look at what's being built. You got the strip center being built. You got the freestanding Starbucks, the gas station, the mini warehouse. All of that fits. Obviously, single family detached homes, love to write those. We can write ground up new. We can write renovations, remodeling projects. tenant build outs, or existing structure with renovations. We can do all of those things. 5 million frame, 10 million M&C and fire resistive. So let's talk about just the sheer size of this market. So over 1 million single family homes being built in the United States today. And it's interesting because I study housing a lot, and I look at it more at a metro statistical area. So any big city has a metro area, usually is the surrounding counties and this and that. So we have some phenomenal growth going on in the United States. Now, obviously, some of the goal, the Texas, the Floridas, there are a lot of California, those places, but Arizona is growing very fast. Georgia is growing very fast. We have a lot of growth even in the Midwest in places, maybe a flight away from the urban centers, more towards suburbia, but housing is very strong everywhere. So that's one thing I want to say, that just the sheer size of this gets me excited sometimes. This is a national program. We write business in 48 states. The only 2 states we're not in is Hawaii and Alaska. I do get asked about those. We're working on that, but for now we're everywhere else. So it is a national program. And the last piece is this renovations. I just want to touch on that. So if you're in an area, maybe an older area where there's not a lot of new construction going on, there's always the renovations, remodeling going on. We can do things on the existing structure, like a stated value endorsement for the existing structure. Our pricing is very competitive. Our form is very broad for the renovations and the remodeling contractor. So keep that in mind. Competitive base rates. We're trying to get to some agents say, just give me your best price up front. So we try to do that. Now, ideally, from an underwriting standpoint, we would love to have the last look. I'm always asking for the last look. So if we get in a competitive situation, pick up the phone and call us. We'll see what we can do. If it's a good risk, we'll price it accordingly. But on the other side, we do want to give you a very competitive quote up front. So the whole thing is, you don't even have to talk to an underwriter if you don't want. I mentioned flexibility again. Flexibility, maybe you need a 6-month policy, maybe you need a 9-month policy, 12-month, 15-month. We can be very flexible on the terms of these things. We have certain rules we can't break, but then we have certain guidelines that we can kind of bend depending on the risk and the quality of the submission. So I did have an agent the other day call me and told me this long story, and they go, what should we tell the underwriter? Because I guess they thought I wasn't the underwriter. And I go, I don't know. Why don't you tell them what you just told me? And they're like, oh, that sounds good. I think I will. So we're like a team with you guys. Tell us everything you know about the risk, and we'll make sure that it's covered properly. Builder's risk is a unique line of business. It's a little different. It's not workers' comp. It's not general liability. It's not auto. It's inland marine. It's can be a very broad coverage line of business. Labor, materials, overhead. It can even include delay in completion, soft costs. There's a lot of things that built in this little line of business. So it's pretty broad. So you need an underwriter that understands the line. Okay, I want to touch real quick on the pass-through. I've gone through this a couple times before. So what we're trying to do is make this as easy as possible for you, the agent. We're only going to ask the very basic underwriting questions. We've got this down. We're about 30% less questions than the competition. So really all you need to know, does the builder that's building the house have experience 2 years? Yes or no? Obviously, we need to know when this thing's starting. We have to have an address. We got to know where this thing's located. We have to know what it's being made out of. Is it frame? Is it joisted masonry? Non-combustible? If there's a doubt you don't understand, give us a call. We'll walk you through it. We need to know the completed value of the project. Usually that's the selling price minus land, because everything that goes into the structure, labor, materials, and overhead, profit, all of that is included in our form. So completed value is important. Pick a deductible. Tell us what the ISO protection class is, 1 to 10, and that's all we need. So it should only take a minute or 2 to fill this out, and that's all we're going to ask. If it meets our criteria, there's no holes. You hit a button, you're going to get a quote, you're going to get a policy. We want to do as many of these as you can put in the system. We have one of our favorite agents the other day. The CSR did 11 policies in under an hour. I'm sure she was probably doing other things, probably multitasking, but that just shows you what can be done. It's not that hard to do as long as you have this basic information. So what I like to do now is open it up to questions. That is our program, kind of in a nutshell. And hopefully you'll give us a shot. That's really what we're after. Is we want you to, hit the V button, go to Victor Builders Risk and enter some information and get a quote. I think you'll like the experience. Call us on the 800 number. We're here to talk to you. Darcy, do we have any questions?
Hey, Jeff, we do have a few questions.
Good.
Here's the first one. Is 5 million frame the maximum limit for all projects on a reporting form?
All right, so we can do a couple of different things on a reporting form policy, but yes, we'll have a max loss of 5 million. You could have more at risk, but maybe it's spread out all over the county or several counties. So the 5 million is the max loss limit, but in reality, you're writing a reporting form that has more property on that, if that makes sense. Good question. It's more of a reporting form question. And I would say those are the few that you probably go ahead and start them in the digital platform in the portal, but we're going to have to talk to you on the reporting form. We did one the other day. A builder built over 400 homes a year, so we can write a pretty large account on that because we're very flexible on the reporting of inventory. Good question.
All right. Do I have to provide the protection class, and how do I find that data?
Yeah, the rating factor in builder's risk, at least our builder's risk, is the protection class. We have to know where it's located, what's the construction, and the ISO protection class. We do get asked that a lot. Now, 85, 90% of this country is 1 to 8, which is considered protected. But we do have that 10% of the country that's 9 and 10, and that's really what you're looking for. So if you're in a rural area or if you're in a mountainous area, I see a lot of 9s and 10s in the mountains. That's when we have to know, because it doesn't mean we're not going to write the 9 and 10. We're just going to ask a few more questions, water supply and this and that, and the rate is going to be higher than 9 and 10. Another way to find what the class is to call the local fire department, have a conversation with them. We've done webinars on protection classes. So it's not only the distance to the fire department, it's the distance to a working hydrant. That's the water supply. That's what makes a protection class. So, but we do need the ISO protection class. If you ever have trouble, give us a call. We'll see if we can't find it for you. Good question.
All right. Will you cover projects that have already started?
Okay, we cover projects that already started. Remember I told you that the builder thought the owner got the coverage, the owner thought the builder, vice versa. Yes, we will. And under our eligibility, if it's up to 30% complete, it can still flow through the system if it meets all the other criteria. If it goes over 30%, it's going to generate an underwriting hold, and we're going to get on the phone and talk to you about that, find out what's going on. So we will work with you on that because it does happen every day. Sometimes it's nobody's fault. They literally just forgot. They thought the other person had the coverage. So yes, we will work with you on that, and that should be okay. Now, if it's 90% done, it's a little beyond builder's risk at that point. It probably needs to be on a permanent property policy. Good question.
All right. What are your coastal limits?
We have a very simple coastal guideline too, and it's funny that we're going to ask you only one coastal question in our portal. We used to ask like 10, 11, 12 questions. Now we ask one. We ask distance to the coast, and maybe we should define the coast, but it's the true coastline, the Gulf of Mexico, the Atlantic Ocean. Those are the coast, and if it's within 1,000 feet, we're not going to write it. So it's 1,000-foot rule of the coast. Now, there's places like Chesapeake Bay, you could be 50 miles inland, and it's still tidal. We do not consider that the coast. Now, if it's in areas like South Carolina, and there's some barrier islands, those are submitted. I take a look at them. I do write some business there. We just have to be careful. We need to make sure we're on the west side of the island, so we're over 1,000 feet from the coast, the true coastline, and we'll work with you on that. Because the East Coast is full of those kind of areas. And we do write business in Florida. To give you an idea, Tampa Bay, you could be well inland, still tidal. And we'll take a look at that. I mean, that's kind of the political answer, but it really does depend on the value and the construction and what we got going on, but we have been known to write those risks. So just remember that 1,000-foot rule. And that's really the only when question we ask. Good question.
All right. If a building is 50% masonry and 50% frame, what classification is it?
So, I used to be a property underwriter before I was in the marine underwriter. So this is my property underwriting background coming into play. So we were taught at a long time ago that you always underwrite to the weakest point of a structure. So theoretically, a building can be 90% masonry, 10% frame, and we would rate that as frame. So answering your question, that would be a frame building if it's 50-50. And we do see a lot of what we call podium construction, where the first 2 floors are masonry, and you got 2, 3, 4 floors of frame above that. Those are frame buildings. When you have frame involved in the load-bearing aspects of the project, for the sake of the program, it's rated as frame. Good question. Now, you might be able to talk the underwriter into giving you a little credit on it because it is partially masonry. It's still going to start out as a frame building, and then you can price it from that point on. So it's worth mentioning. Little tip for you.
All right. Now, do you have midterm cancellation available?
What we would prefer to do, and this is kind of a completed value builder's risk, how we built this, is that we want to give you a very competitive price going in up front so we don't have to worry about canceling it. So you write a 12-month policy. If the project's done in 9 months, we just keep on going. You don't have to worry about it. So you don't have to worry about the pro rata cancellation and all that. Having said that, if that becomes the most important thing to your agency or to that contractor or owner, we will work with you on that, but that would be more of a deal you would work with the underwriters. But I'll say, I mentioned that word flexibility again. We're pretty flexible about these things. So give us a call and we'll talk about it. Good question.
All right. Is general liability available for the property?
You've asked that question a lot too. So our program is a monoline, unsupported in the marine line of business. Now we're always working to add other lines, so stay tuned on that one. But for now, we write builder's risk, course of construction in the marine line only. That's what this program's designed to be. But we want to be the very best at that we can be. So.
All right. Do you have permission to occupy available?
Do we have permission to occupy available? Yes, we do. Now, keep in mind, we allow some occupancy built into our base form. I mentioned it earlier. 90 days occupancy clause is built in automatically, so that's fine. On a commercial project, if it's to be leased or rented to others, we can allow up to 75% of the square footage to be occupied before you would need to add permission to occupy. But if you run into a situation where you have to have it, we do have the coverage available. That is an optional coverage. But just make sure you read that when coverage ceases and you might not need it. Good question.
All right. If you are not providing the liability portion, where can we go to place that coverage?
Yeah, I wish I could say, yeah, call my buddy, Billy Joe Jim Bob. He writes the GL. I will say it's on the builder side, residential general contractors, 100% subbed out, paper generals, that's who builds the stuff we're talking about today. It's kind of a tricky marketplace for the GL. There's no one national carrier that writes a whole bunch of it. I would probably check with your local home builder association. They have some mutual companies in different geographic areas that write some. A lot of it's geographic. There's a company that writes it in Texas. There's another company that writes it in the Northeast. So you got to kind of find that local company that will do it. But it's a tricky class to write the GL on. And if you want to talk about that further, you can call me if you want to talk about it later. That's fine too.
All right. So what is your appetite on frame construction? For example, will you write something over 20 million frame?
When I said earlier, when we were talking about eligibility, we can do up to 5 million frame. Okay, and that's a rule. We can't go over the 5 million. So we will look at it. Sometimes we have adequate clear space between different projects. And so we could write separate policies and do things like that. But 5 million is the rule. And I will say that marketplace has gotten very tricky when you get in a high valued frame. A lot of companies are pulling out of that part of the business. Give me a call offline, we can talk about it. But our program is built up to 5 million.
All right. Now, do we have a sample builder's risk policy available?
Yeah, if you go to our website, which is Darcy, we need to direct them to where our main website is, and then you go by program. We put our policies and applications and everything out there. So I mean, it's all available for you. I love it when an agent pulls the policy and wants to talk coverage. Pull the policy. If you got any questions, by all means, call me, and love to talk to you about it. In fact, I'll even put, there's my phone number and my email address. Donna Berry's our senior underwriter. So give me a call though. We got Donna busy doing all kinds of stuff. So give me a call. I'm here to talk to you about it. And love to hear from all of you.
All right. Next question, is monthly reporting available, especially on a small risk?
Well, what we'll do, we call that the reporting form. I mentioned that earlier. So, I mean, it doesn't make a lot of sense to do it on a small risk, but on a home builder that's building 10 homes, 15 homes, 20 homes, or a tenant build out contractor. We wrote one the other day. It's actually a friend of mine that builds Jimmy John's sandwich shops. So we wrote a reporting form because he builds the same thing over and over again. Because that's what we're looking for on the reporting form. And we can work with monthly rate, annual rate, quarterly, semi-annually. We can do all kinds of stuff. We're very flexible on the reporting form. But on a small job, if they're only building one thing, then obviously they don't need a reporting form. But it's for the people that build the same thing over and over again, and they do a lot of it.
All right, Jeff, it looks like we've answered all of our questions today. If we want to wrap up 2 minutes early.
Ooh, that's a difference. That's a difference. I really do appreciate your time. I can tell you were tuned in, a lot of good questions. And like I said, I'll just leave you with this. It's our last webinar of 2021. We'll start these up again in January. Any ideas you have on the topics within the builder's risk line of business, let us know. Because we have a lot of webinars, a lot of interesting stuff to talk about. And we really look forward to doing business. There's a lot of business to write, so keep us in mind. And I guess if I leave you with any one thought, if you think of builder's risk, just think of Victor Builder's Risk, and we'll get you set up. So once again, have a great day, have a good holiday, and I will talk to all of you next year. Take care.